Hey, what's going on out there, everybody? You already got the number. If you want to call in and talk live tonight, call in 720-515-3763. Today, we finally got Apple's earnings, and we also got Amazon earnings today. They came out after the bell. After the bell, let me double check to make sure nothing changed on you. We've seen Apple go down. Apple had a drop after the market, not a major drop, but about a 2% drop. And we saw Amazon pop, went up to the upside. The last time I looked at it, was about 8% in the aftermarket. So, ladies and gentlemen, that's what we're going to talk about today. We're going to look at these 10 Qs that came out today, which is the quarterly reports. We're going to look them up. We're going to talk about it. We're going to have some fun. But as always, if you haven't got your Investor Show mug, look at that. It's the only way to read those financial reports. That's how we're going to read them financial reports. Make sure you get your Investor Show mug. Look at it. It's the one-of-a-kind Investor Show mug. And I guarantee you, it makes you read these reports 10 times better. But ladies and gentlemen, what we're going to do today, we're going to jump straight into this thing. So ladies and gentlemen, if you haven't done so already, please go ahead and make sure. Hit the subscribe button. Hit the bell icon. Hit that like, comment, and share button. Boys and girls and children of all ages, you're now tuned into the Investor Show. As always, this is your gracious host, the Prince of Investing, Prince Dykes, coming to you guys and girls live, all the way from the beautiful city and state of Denver, Colorado. It is a late night show. It is after midnight on the East Coast, but it's not here in Denver, Colorado. It's 10 p.m. Sometimes I just jump on live. I see you guys just jump on live and support me, and I'm coming back. I'm coming back stronger than ever. I used to do these all the time, but I kind of fell off. I don't want to get into that whole story. Y'all saw my podcast about why we didn't do it, but let's look at it today, ladies and gentlemen. Let's see what Amazon and Apple got to say. So let's take a look here before I pull it up. And if you want to call in, y'all got the number 720-515-3763. So let's go here. Let's see what Apple stock aftermarket. Let's see if it dropped anymore, because this is a weak market. You had that old downgrade, the Finch Tech downgrade. I don't even pay attention to the credit downgrading or whatever, because they're saying, hey, America can't pay his bills. Are you serious? America can't pay his bills. I'm not worried about that, because we can print as much money as we want to. And if you don't like it, okay, so Apple only dropped 2% today. 2% drop on Apple. Amazon shot up 10%. Very big day, because that was a NASDAQ. So without further ado, ladies and gentlemen, let's get in here and let me share my screen. And so if you want to follow along with me and see what I'm looking at here, here we go. Boom, y'all got it just like I am. Here we go right here, ladies and gentlemen. Okay, there we go. Making sure y'all got it just like me, right? So this came out today, hot off the press. Let me, do I want to put, okay, y'all got the number down at the bottom. So Apple here, third quarter earnings came out today a couple hours ago. So it says service revenues reaches new all-time high. Installed bases of active devices set all-time records. So Amazon and Apple is very interesting, because they're both held in the NASDAQ. And I knew whatever they decided to do was going to set the trend for the NASDAQ. Now we're looking at the fundamentals here. This is a fundamental investor who looks at annual reports, quarterly reports, see what they're investing in. A technical person could care anything less about what I'm going to say for most of this episode, which we are going to touch some charts here, right? We are going to touch some charts here. So when we touch some charts here, we're going to look at, the upward trend. Apple all year long has been reaching highs. It's been stretching, and it was going to be very hard to push through to get to that 200 level, which I was going to be very surprised if it did. So I wasn't thinking it had enough juice on it, looking at the technical side of the house. But, me, I'm more on the fundamental side of the house anyway. So the short-term traders are the people who look at the charts and technical and the moving averages and Bollinger Binders and all the good stuff like that, versus the fundamentals, the people who look at this and just kind of stay put. 2% drop today. For what reason? Let's take a look. So this coming out of today. They're saying Apple today announces financial results for its quarter 2023, July 20th, 2023, right? July 1st. The quarter ended on July 1st, 2023. The company posted a quarterly revenue of $81.8 billion. Is down 1% year over year. Its quarterly earnings per diluted share is 1.26, up by 5% year over year. I mean, $81 billion this quarter. Pretty good on them. So let's see what the CEO got to say. Tim Cook says, we are happy to report that we have had an all-time high record revenue in services during the June quarter, driven by over 1 billion paid subscriptions, and we saw a continuous stream in emerging markets thanks to a robust sales of the iPhone, said Tim Cook, Apple CEO. From education to the environment, we are continuing to advance our values while championing innovation that enriches the lives of our customers and leaves the world in a better place than what we found it. When I look at this, it sounds like a bunch of crap to me because everybody knows the iPhone hasn't really evolved since the iPhone 4 when Steve Jobs was alive. When you look at, I have a 12 and I have a, 14 or 15? I'm doing a 15. I got a 14 and a 12. This is my 14 right here, right? And it is not that spectacular. It's not that big of a difference from my 12. It's just bigger and it's supposed to be faster, but I don't know anything unless I'm not using it properly. It's not that drastic of a change from my 12 and my 14. Why do I get a new? I usually get every 2 phones, is because, I mean, not every 2 phones, but like I have the 14 now, I probably get the 16. And it's just because I'm very heavy handed when it comes down to electronics. I treat electronics very bad. I'm very rough on them. I don't know how many sets of AirPods I brought, headphones. I'm just rough with electronics. So I don't go out here and buy stuff because I want to have the newest, hottest thing. But notice, I don't see anybody wrapping around the store to get the new iPhone 12, 13, 14, 15, 10, or 11. Not like it was. When we had the Apple One, man, that was like a moon phone back in the day. People was on the BlackBerry, was the hottest thing. When that first Apple phone came out, man, it was like, people were like, a spaceship. AT&T was the only service it had, and it was like a spaceship back then. Then when the Apple II came out, I think it came out with a camera. Then the Apple III is like, we're going to have 2 cameras. It was always evolving. Then they came out with the tablet. It was like, oh, it created the whole tablet market. Now I got tablets laying around my house that I don't even use. I'm like, well, I got this thing. But then it had the tablet. Now you have a whole tablet market that's going on. Tablet ain't nothing but a big iPhone, a big iPhone, but a small laptop. So you had tablets walking around. I got a phone, and it was just so innovative, that's what they were until Steve Jobs died. And Steve Jobs died is just like, oh, here's I don't even know what they call them. What's the Apple tablet called? The Apple, I can't remember and think off the top of my head, but it's the innovation has not really been there. So Apple is one of those companies I look at that is $1 trillion company, very mature. Is like the old school how IBM. If y'all remember how IBM was like the hot new chip company, computer company back in the day that Warren Buffett kind of slid into, and he was riding IBM. Now Warren Buffett is riding high into Apple. So I think Apple is slowly sliding off into that position to where you're so big, you just start to buy up little things and you just kind of like keep your footing. I don't see a whole lot of innovation. Now I do see them with these goggles. I'm going to see what they say about these goggles, but not a whole lot of innovation I see coming out of Apple like it once was when it had its resurgence back in 2020. All right. But we're going to follow in. Let me see. We got a comment here. Who's in here? Oh, that's my guy, Al. Al always in the building. What's going on, Al? Oh, I ain't having a sound effect down. Let me go, Al. So right here we go. Our June quarter, year-over-year business performance improved from March, and our install base of active users reached an all-time high in every geographic segment, said Lucy. I can't even say her last name. She's the Apple CFO. During this quarter, we generated a very strong operational cash flow of $26 billion, returned over $24 billion to our shareholders, and continued to invest into our long-term growth plan. I wonder what is that long-term growth plan? So Apple's board of directors has declared a cash dividend, a cash dividend of 24 cents per share of the company's common stock. The dividend is payable August 17th to shareholders on record as of August 14th. So if you're on record as August 14th, you're going to see a dividend payout on August 17th. Usually when they pay out those type of dividends, you'll see the stock kind of drop on that day or whatever, but it's nothing crazy I could really play off of. It said Apple will provide a live stream financial conference call beginning at 2 p.m. Pacific time, which is 1 p.m. my time, I think, on August 3rd. No, 3 o'clock my time. I'm sorry, which is 4 o'clock on the East Coast time. I'm sorry, it's 5 o'clock on the East Coast time, 4 o'clock my time. I got that right. I'm thinking like what, 3, yeah, 5, yeah. So the webcast, you can play it back. So I don't want to sit back and try to play it back because of you got to sit back and listen and hear all the financial jargons and stuff like that. Every now and then I listen to when I'm bored, and it's if you can listen through some things, you can find some things there. But let's pull up the good stuff. This is the good stuff. These are the finances. You ain't gonna find these finances nowhere else, and you ain't gonna find nobody else that's gonna break them down like the Investor Show. Let me close out of that one. Let me bring y'all up. Now we're going to go through their finances, Apple finances. We're going to share this screen here. We're going to go to our third quarter finances. We're going to look at the numbers. Think about it, ladies and gentlemen. A guy says something. I did an episode the other day. He said something very profound to me. I said, selling the stock. When do you know it's time to get out of a company and sell it? He said, Prince, think like you're the CEO. Knowing what you know, you study the finances. Would you sell that company if you was the CEO? Would you head for the border if you was the CEO? Or do you think it's more growth? Man, that changed a lot for me. So he was saying, hey, if you own Apple stock and you knew the numbers of Apple, would you sell, and you own Apple, the entire company right now, you was the CEO or you was a founder or whatever, would you sell this entire company, or would you say, man, heck no, I keep on to it, keep on holding on to it? And I said, you know what? That's a good philosophy, because no, if I owned Apple, I would not be selling Apple, because Apple is in a unique position to where it dominates the market. It's only two phones. You're either going to get an Android when it comes down to phones, and we're going to see where they make all their money from. So here we go. This is their condensed consolidated statement of operation in millions. It's expected number of shares rejected to thousands. All right. So ending in July 1st, 2023. They made $60 billion in product sales, and then they made $21 billion in services, subscriptions and stuff like that, Apple, whatever. So they sold $60 billion in a freaking quarter. That's crazy. So, they're looking at their total net sales of $81 billion in one quarter. That's when they got the number $81 billion you see in here. Now let's see how much it costs. So they're saying it cost them $39 billion to make the product. And then in return, they made $60 billion in product sales. So it cost them $39 billion to make these products. And in return, they made $60 billion. So this is how you get your gross margin. So, you're looking at 60 minus 39 is what, 21, right? 21 billion. Look at my math teacher be happy for me. Shout out to Miss Williams, Dr. Williams, now my 7th grade math teacher. So here we go. They made $21 billion off of just the product itself. So $21 billion after putting up $39 billion, and you can make, if somebody took, that's like somebody saying, hey, you're going to take $39 billion and then you're going to make $21 billion. Not a bad exchange. You look at their profit margin there. You are 50 something, how much money it took you to make that 69 billion. I had to sit back and do the numbers, right? So don't quote me on this, but this guy's a freaking idiot. So the services is way cheaper. $6 billion was put into service. $6.2 billion was put into services, and then they made $21 billion in services. So the total cost of putting everything together is $45 billion. So, you're taking that top number, the total net sales of $81 billion, and you're subtracting out what it cost them to make it, which was $45 billion, giving them a gross margin of $36 billion. So essentially, they had to put up $45 billion in order to make $36 billion. So you look at that, ladies and gentlemen, if somebody's saying, hey, give me $45 and I'm going to make you $36, that's a pretty good freaking return. All right. So now they gross $36 billion, but they still got other bills to pay. So let's check it out. So they spent $7 billion on research and development. Can you look at that in a quarter? Hey, just put out $7 billion on research and development. Then they have to do sales, SGA, which is sales general administration. They spent $5 billion. So out of that $36 billion, they had to put out $13 billion for research and development, sales, for the operating expenses, right? They got to pay the bills. They had to put out $13 billion. So now that left them with $22 billion. That's their operating income. After they paid the operating expense, they got $22 billion. So they spent $265 million on other income, right? income provision for income tax. So now they're left with 22 billion, right? So they got income provision for income tax. They got $22 billion. Provision for income tax. They had to pay $2 billion in income tax. So they have a net income of $19 billion. They got a net income of $19 billion to paying all their bills off in one quarter, right? So when you look at it, $19 billion, they give you earnings per share is $1.27. They got it diluted is 1.26 this quarter. So now you look at it, ladies and gentlemen, this in a quarter, they netted after paying all their bills, taxes, they took home $20 billion. Shout out to them. Shout out to Apple, $20 billion in a quarter. So as y'all can see me walking down these finances, you know, you ain't gonna get this nowhere else. Nobody's gonna break down the finance. I'm not just gonna talk about the news headlines. I'm gonna give it to you raw. So we're going fishing because they say, hey, if you give a man a fish, you feed him for a day. You teach a man to fish, you teach him to fish for a lifetime. Goodness, I butchered that. I butchered that. I don't know, like I don't know what, right? So I meant to say, if you give a man a fish, you feed him for a day. If you teach a man to fish, you feed him for a lifetime. So I'm teaching you guys and girls how to fish. So grab that tackle box, grab that fishing pole. Let's go fishing. So here we go, right? So most of their sales is coming out of America and Europe. You know, 35 billion in America, 20 billion coming out of Europe. Number 3 is Greater China. Greater China, 15 billion. That's something that's very scary. This is what you can see. In a quarter, they make $15 billion out of China. If we get into trouble with China, you can see how that affects us. We get into trouble. We get into tension. We get to fighting over Taiwan and break off this or that or whatever. You can see they're making $15 billion a quarter out of China alone, the Greater China area. Coming in number 4 is Japan at $4 billion. And then the rest of Asia is about $5 billion. So this is where they're mostly selling everything, right? They're selling $35 billion in America, $20 billion in Europe, and the rest of it is, you know, China, right? At number 3. Now we go on down to, hey, how are they making all this money? Their number 1 seller. Let's do a drum roll, please. Do I got a drum roll in here? Do I got a drum roll? I ain't even got a drum roll. It's on my other, I got to flip through it. I should have it drummed up, but if you don't know, guess what? You're going to learn today. You're going to learn today. So here we go right here. The number 1 seller is they made $39 billion off of iPhones. $39 billion off of iPhones. So that's their number 1 seller. Number 2 is their MacBooks, $6 billion. Number 3 is the iPad. That's what it's called, a tablet called the iPad, $5 billion. Then you got wearable devices and accessories, you know, the watches and, you know, the other crap you can buy, the speakers, headphones, all the stuff like that. They made $8 billion, but it's not even close. So you look at, and their services is $21 billion. So you can see their bloodline is the iPhone. The iPhone makes 39 out of the $81 billion, 39 of the $81 billion, which is about a good, almost 50% of their income is coming from the iPhone. So when you read the finances, you know the bloodline of a particular company, how they make and lose money. So $39 billion, right, is what they make off of the iPhone. And out of their total sales of 81. So it's 39 billion. Then you look at it coming in number 2, 6 billion. That's very small compared to 39. 6 billion off of the MacBooks, 5 billion off of the iPhone, iPad, I'm sorry, of the tablet. Then you got 8 billion off of, you know, the watches and the headphones and the home accessories or whatever. And then their number two spot is services. So their bloodline, 75% of Apple's money comes from the iPhone and their services. You know, their service, like, you know, they got Apple Music and other type of ways. I got to look into their services. So you can see the reason that's why it's important to people think they know about a company. You look into the finances, it'll tell you. So right here, you already know 60 to 70%. Because you put 39 plus 21 is 50 with 3, 4, 5, 6, 60%. So that's 60 billion. So 60 billion is what percentage of 81? That's about, just off the top of my head, half of 81 is 40. So half of that, 40, 60. So 75% of Apple income comes from the iPhone and their services. So if I was an investor like I am, I'm paying attention to that iPhone and their services. That's the top two things. See, Apple kind of remind me of the iPhone business, almost like what you call it. So they almost remind me of WWE. Once they get to the top, they just kind of keep their, keep their reign going, but they don't do anything. So that was the operational sheet. Now let's go and see how much money they got in the bank. How financially sturdy are they? If you're an investor, see some people in there looking at, hey, what happened today? Did it make a jump? That's for the long. That's for the short term. We're going to look at the long term, right? Here we go here. Al, what's going on? Al says Apple's phones, Microsoft computers. That's a good point. Let's give him a gem for that one. Apple phones, Microsoft computers. I should pull up Microsoft computers too. He said Apple equals phones. Yeah, yeah. Okay. So now, and that is true because everybody, most of the world is on Windows. So let's look at how sturdy their finances are. So the first thing you're looking at, they're saying July 1st, 2023. You're looking at their current assets. The current assets is like your checking account, savings account. How much money can they convert to cash real fast if crap hits the fan? So in cash, they got 28 billion. Marketable securities, they have 34 billion. This is their current assets. They got the accounts receivable. This is money coming into the company, 19 billion. The inventory is worth 7 billion. The vendor non-trade receivables is at 19 billion. I look into that vendor non-trade receivables. Other current assets are at 13 billion. So they reported their total current assets is at 122 billion dollars. This is 122 billion dollars is how much money they just have laying around that they can turn around and just turn into cash at any time. Right? They could turn around. This is money that if it's a current asset, that means less than 12 months, this money can be turned into cash. So this could be in CDs, cash, savings accounts, money market accounts, stuff like that. $122 billion. So even when people are like, oh, this person is a capitalist, they take all the money. Even if you got $122 billion, where are you putting that money in? This isn't current assets. This money is probably sitting in a couple banks, a couple whatever, and somebody's collecting the fee off of that too. So even if you try to hog up all the money, you're going to still end up sharing it whether you like it or not. So they're non-current assets. These are more like the long-term things, right? They have marketable securities, 104 billion. They got their PPE. This is their property, plant, and equipment at 43 billion. The other non-current assets is at 64 billion, right? Their total non-current assets is at 212 billion. So their total assets, they have 335 billion is their total assets that they are reporting. Right now that you have your total assets, so we can figure out what your net worth is. Now let's look at your total liabilities. Their total current liabilities is money that they owe right now is 124 billion. So you look at it, they got 122 in current assets, but they had 124 bills out there at 124. So they're about 2 billion negative when you look at that burn rate, that current, what's that called? The current burn or something like that. Not working capital crap. I'm all over the place right now. I think that's the asset ratio. I got to look into that. I need to get back sharp on that. I think that's like the asset where you take the current assets versus the current liabilities. So let's take all their current liabilities. I mean, they're non-current. They have $98 billion in debt. They don't have a whole lot of debt. They got $274 billion in debt. So total altogether with their current liabilities and their long-term, they got $274 billion in total liabilities, and their total assets is $335 billion. So that's going to bring their network of Apple to 100 and something, right? 60 billion. Okay. 60 billion is the total network, the total network of the company, right? So that's when you take all their assets, all their liabilities, $60 billion is what they're sitting on top of. So when I look at a company like this, now you got next up is their cash flow. I look at a company like this, and right now Apple is trading in the aftermarket for 187. So I look at a company like this, and it's like, oh, is that 187? I look at it as a steal, as my long-term eye looks at it, right? This is what the long-term eye looks at it. Come on, I got a company. I know exactly what it is. They made $81 billion in a quarter. They got this much income. They got 120 some billion dollars sitting in the bank. They got a network of $60 billion of the company. Come on. Not worried about it. Not anything of flashing concerns. Now, the bloodline, like we just said, Apple makes his money off of services and iPhones. iPhones and services is their money. That's their bloodline, you know. And especially, this quarter, we can look at it in the quarter. So there we go. Still a strong financial company. Now, if you look at, just for giggles, let's take a look at Yahoo Finance. Easy place to go to look up some charts. They got some pretty good charts. I like their charts. And the reason, now let's look at it technically to see what it looks like. Yeah, we got the jobs report coming up. I think the jobs report is going to look good. Now we're going to go back here. Now we're going to take a look at Apple on a chart. Oh, shut up, Yahoo. Quit trying to sell me stuff. Apple. On. You can do it. No, not AMD. The chip company. Come on, what's going on here? My computer trying to. Give me 1 second here. My computer decided to take a breath on me. There we go. Now we're gonna. Sometimes that happens. Y'all know how technology is. Sometimes. Come on, my Mac. Speaking of Apple, everybody that knows me knows I'm an Apple guy for the most part, for obvious reasons. Let's go here to the charts. So you look at Apple all year long, man. They've been killing it. So right here, they're telling you they're 197. They went down a little bit, 2% on the market. Now we're going to go into more the short-term rest of the day traders. Earnings, the best time to trade earnings is probably the aftermarket. Because right now in the aftermarket, you can see Apple has sunk. And depending on how the market does tomorrow. It doesn't have oh crap, I didn't set it up on here, did I? So let's put in our indicators here. I'm going to put an 8 and a 20 on. We're going to put an 8. And we're going to put a 20. We're going to moving average. We're going to put a 20 on. This is the 8-day moving average and the 20-day moving average. When you look at this chart here, this is a 5-year chart. You look at the 5-year chart, you can see Apple is on an upward trend. Let's look at a year-to-date chart. You're looking at today, year-to-date. Apple came out in January sitting at about, what is that, $61? That's 125. Okay, that was some volume. I'm about to say Apple. No, see. So about $125 it kind of started the year off at. And you're looking at today is almost stretching it there almost to that 200. Look at this straight chart. Yeah, it had its ups and downs, but it's been a pretty bullish trend, all year long. So when you take this back and you look at a 5-year chart on this, it's going up to the not to the moon, but we go to the max of this chart. That's the 5-year chart you're looking at now. And you can see that this is an all-time high. Now, granted, Apple was at $700 at one time. We all know that. But we're seeing how much Apple has jumped throughout this time frame. So you're talking about something realistically, Apple today, it can stretch up there. It still has room. It's definitely been higher than that. It's definitely going to go beyond this. Y'all going to look back on this video probably like 5 years from now and be like, man, Apple was $100 in your video, man. That's freaking crazy. I wish I could have bought it for $100. So I tell people out there now, they're listening to this, trying to figure out what the move is going to be for the day. Man, this is $191. You can spend $100. You in a date at Outback. Y'all go in there and get an appetizer, an entree, and God forbid if y'all have some drinks or a dessert, you can spend over $100 at Outback. So throwing another $90 with it, and you got a multi-billion-dollar company that has a network of $60 billion, $122 billion in cash. Only competitor is really Android, kind of Microsoft. Come on. It's a no-brainer to me if you want to have that in your portfolio. So yeah, it's been a strong bullish trend up to $191 where the market closed out today. So in the last 5 years, this is kind of no man's land, right? This is kind of like stretching it. It's not a whole lot of room to go. So here we go. So now let's take a look. Let's see my guy Al. Al said, "You spent $100 in the club for drinks. Put your money on these stocks." That is true. Me and Al have gone out and I've blown a lot of money sitting. I've gone into places and brought 5 or 6 cigars and a bottle of whiskey and spent this much money. So he's 100% right. People like to become, let me say this real quick. People like to become Albert Einstein when they're buying assets. It's like, well, I don't know. Apple, I have to look into this company and see if would this be a good fit for my portfolio and do. But you're like, well, you're like, hey guys, would you buy Apple for $200? Everybody got all these questions. But then you go in and buy a bunch of cigars and whiskey, and you go golf. If I want to go golf tomorrow morning, that's probably cost me like $50-$60, depending on where I go golf at. And then once you get to golfing, you probably buy some drinks, and you probably by the time you buy some balls and drinks and this and that and get a cart with it, and you don't spend $100 on a day of golf. That's just to walk behind a ball. So when people try to dissect and say, I don't know, they want to become Albert Einstein. But let's go look at Amazon. Let's get some good news. Let's look at Amazon. Let's see Amazon blew it out today. Let's go look at Amazon today. They're going to be the ones that's probably going to carry the NASDAQ tomorrow after this jobs report. We got a jobs report that's due, which I'm pretty sure the jobs report will be good. Because I read the weekly the other day. The weekly is going to match the jobs report for July. It's going to be great, but we're going to take a look at it anyway. Let's take a look at Amazon. So if you want to look up this too, you just go to Amazon. You can just type in Amazon IR. IR is short for investor relations, right? And you go right here to quarterly results. Every company has this. Or you can go to the sec.gov and pull them off that way. So either way you want to do it, you can do it. So here we go. We're in the second quarter 2023. Okay. Here they are coming out of Seattle. Amazon, part of the NASDAQ. NASDAQ is Apple and Amazon. Apple and Amazon pretty much control the NASDAQ. They're that big. They weigh that much. Their weight combined is going to move the market. So that's why I really paid attention to this one. It said today the financial reports for its second quarter ended on June 30th, all the way to June 30th. Here's their second quarter. Their net sales increased 11%, 134 billion. 134 billion. Right? And I think that Amazon, you look at it, Apple was 80 billion. Now you look at Apple is $191. Amazon is how much? Amazon is trading for like 130, I think. Let's look at it. So Amazon stock is $128 when it closed out today. In the aftermarket, it's at $140 now, right? So right here, it says net sales. They increased their net sales by 11% in the second quarter compared to 121 billion in the second quarter of 2022, excluding the 0.3 billion unfavorable impact from the year-over-year changes in foreign exchange currency. So right now, the dollar is so strong right now. When we go to buy foreign things, it changes things. So when you have a strong dollar, it does affect the economy too. So net sales increased by 11%. So they made $134 billion in sales during the quarter. So the North American segment sales increased by 11%. The international sales increased by 10%. AWS, that's another one. AWS segment increased by 27%. So North America, they made $82 billion. Overseas, they made $29 billion. And they made $22 billion in AWS. The operating income increased by $7.7 billion in the second quarter compared with $3.3 billion in the second quarter of 2022. So look at that. The operational income increased to $7.7 billion. And they're saying in the second quarter compared to the second quarter last year, they're saying this time last year we made $3.3 3 billion. This time we made 7.7 billion, almost doubled the income. So here you go. You got North America segment operational income was $32 billion compared to an operational loss of 0.6 billion. International segment, they made 1.8 billion, right? And they had a loss of 0.9. I want to see what they talk about those losses were. AWS is 5.4 billion. Cool. So let's see. Their net income was 6.7 billion in the second quarter. $65 per diluted share compared to a net loss of 2 billion. So the second quarter 2023 net income increased at a pre-tax value gain of 0.2 billion included in a non-operational expense from the common stock investment in so they brought Rivian Automotives. Did y'all know that? Did y'all know Amazon was behind Rivian Automotives? You know, those electric trucks that I kind of look like the only electric trucks I see out there, include a non-operational expense from the common stock investment in the Rivian Automotive Incorporated compared to a pre-tax evaluation loss of 3.9 billion from the investment in second quarter. So you can see Amazon made a nice investment into Rivian Automotive trucks. So they got an operational cash flow increase of 74%. Goodness, okay, Amazon. 61.8 billion for the trailing 12 months compared to 35.6 billion for the trailing 12 months. Okay. They got a free cash flow improved from inflow of $7.9 billion. They got a free cash flow less principal payments, free cash flow for finance. So let's see what they got to say in their words. They say it was another strong quarter of the progression of Amazon, said Andy Jassy. He's the Amazon CEO. Since we all know, I can't even think of his name. Jeff Bezos sat down. We continue lowering our cost to service to fulfill our networks while also providing Prime customers with the fastest delivery speed we've ever recorded. Our AWS growth stability as customers start shifting from cost optimization to new workload development, and AWS has continued to add its meaningful leadership positions in the cloud with a slew of generative IA releases that make it much easier and much more cost-effective for companies to train and run models. Trainium, I said it is, and the Infra chips. I'm from Waynesboro, Georgia, so y'all excuse me. Customize large language models to build generative AI applications and agents, Bedrock, and write code much more effective with Code Whisper, while also continuing to see strong demand for our advertising services as the team keeps innovating for brands, including a ramp up of the Thursday night football. Oh, Amazon got Thursday night football with the ability for the advertisers to tailor their sports by audience and create interactive experiences for customers. We remain excited about what lies ahead for the customer and the company. Their highlight is obsession over customer experience. Amazon's obsession over how to make customers' lives better and easier every day. This is true for customers, sellers, brands, developments, entrepreneurs, creators, for example, Amazon. So they deliver the largest section of products, US Prime. They held the biggest Prime Day. I didn't know that. Shout out to Amazon. So they held the biggest Prime Day ever on July 11th through 12th, the third quarter, as Prime members worldwide purchased more than 375 million items and save more than 2.5 billion, right? This year, Amazon offered more deals than any past Prime Day, with home, fashion, beauty among top sellers of the categories. This was the largest Prime Day ever for Amazon independent sellers, most of which small and medium-sized business, and the first where US-based Prime members could shop deals directly from the merchants using the Buy with Prime. Okay, so $35 million generated from Amazon Prime Day on July 11th and 12th, right? Increased sections of the US Amazon store. Amazon added a beauty and fashion section. Okay. Announced Amazon Business. is one of the fastest growing offerings, with 35 billion gross sales, running custom. Okay, municipality. I think they talk about the Amazon DSP there. They enable customers worldwide to save $1 billion. Amazon announced Amazon Day Delivery, which give Prime members the ability to choose designated day of the week that makes the sense for them to receive their orders. Oh, okay. So they can get all their orders in one day. Okay, all right. They released the Amazon Annual Small Business Empowerment Report for 2022, which detailed that more than 60% of the sales on Amazon store came from independent sellers, most from which small and medium-sized businesses, US-based independent sellers, more than 4.1 billion products average a $230,000 in sales. Amazon also announced, I'm trying to see right here, Amazon also announced a small business search filter. Okay. It marked this 10-year anniversary of Amazon.in and announced Amazon India. Okay. Prime premiered Air. Oh, yeah, Michael Jordan thing. So they got taken by Air. Who watched that Michael Jordan documentary? I didn't know they made some money out of that too. Who watched that Michael Jordan documentary? Let's see what they got to say there. Where we at? Almost lost. Okay. Premiered Air, which launched in more theaters worldwide than any previous Amazon original film. The film sequentially debuted on Prime Video. It ranked number 3 on Nelson Streaming's top 10 list during the first 3 days of its release. The company also premiered additional Amazon original films, search series, including the final seasons of Tom Clancy's Jack award-winning The Marvels. Okay, Amazon Prime. I see you doing your thing. I watch Air on Prime too. It earned 68 billion Primetime Emmy Awards. It grew Prime Video. So Amazon out here clicking on all the cylinders, things like Amazon out here just all over the place. I saw it was launching. So inventing on behalf of the customers. Amazon is driven by passion for intervention across. Okay. So Amazon got a lot they put in their press release here. Nice little pretty long press release. Let's get down to them numbers, Amazon. Let's see what you got there. Let's get down with the get down. 2023. So they got $49 billion they had in cash, right? They had a net loss. Okay, cash restricted, cash beginning period, 49 billion. They had a net loss of 65 billion. So, okay. And then you are seeing depreciation, non-operating expense, the inventories, accounts payables, unearned revenue, investing activity they purchase. Okay. Financing. Okay, they repurchased their stocks. Oh, they didn't repurchase any stocks this quarter? What's up with that, Amazon? Y'all purchased $3 billion last year. Why nothing this year? It's always good when you see a company buying their own stock. It's like a chef eating his own food. So they got 50 billion there, cash flow. Okay. So here we get down here. So they had $134 billion in total sales. They got an operating expense of $126 billion once they paid all those bills. So pretty much cost of sales, they had to put in about, it took them, now this is where you can look now, Apple was higher when you did look at the gross margin. So they put in, 126 billion. They came with an operational income of 7 billion. So this way you can look at this company and tell the operational income of Apple was way stronger. I can't remember the exact number than it was for Apple. And the operating income is saying that, hey, your total sales, they made 134 billion in sales. Then you look at once they took out of their fulfillments, cost of services, technology, sales, marketing, they only was left with 7 billion. So they made $134 billion. they only left with $7 billion to pay the rest of the money. So you look at the income of interest. So you look at the finances, looking at the operational income, even though that's Apple only made 81 billion, Amazon made 134 billion, but out of that 81 billion, I want to say Apple took home like 30 something billion, where Amazon made almost twice as much as Apple, but it's taken home nowhere near as much. So only $7 billion in this quarter. I'm sorry. So they had to pay the interest. Then once they took in this $7 billion, they had to pay income interest, taxes, benefits, all this other good stuff, right? And you're looking at, they were left with $6 billion once that's all was done. $6 billion what it was left with. But last quarter, they took a loss. Last year at this quarter, they took a loss of $2 billion. But this year, so they're stronger this quarter, but you can tell by after they paid all their bills, they're left with $6.7 billion. But I won't compare Amazon and Apple. I will compare Apple to Microsoft if it was me. Okay, I just got some alert that came through. So yeah, that's crazy. Oh, that's my guy, Wall Street Beef Joe. What's going on, man? Hold on. Are y'all seeing my stuff in here? Y'all wouldn't even see I thought I had it in here. What's going on? Hey, that's my guy, Wall Street Beef. Y'all give him a round of applause, really. So, Joe, you saying you got puts on Apple, Prince, hoping for a drop to 180. I missed the Amazon calls. So a put is somebody who bet against Apple. When does those puts expire? We ain't nowhere near 180. And what made you choose 180, Joe? So when this put, so he has a put, that's a call option. That's somebody who's betting against the market. He wants it to crack down to 180. And you're looking at Apple, the 18th, I'm seeing. Beef, call me up. I want to talk to you. 720-515-3763. Call me up. I want to talk to you. I don't want to go back and forth and miss something because I want to pull this up as you talk to me. So, hey, how you doing there, Miss Debbie? Shout out to Miss Debbie. Miss Debbie, how you doing? What y'all doing up this late? It's past y'all bedtime. What y'all doing? I thought y'all probably catch this in the morning. So Wall Street Beef said he got some the 18th, so that's about 2 weeks. He has some puts on Apple. So he said that's all I can afford. So we're gonna look that up. Call me up 720-515-3763. And he bet against Apple to go down to 180. Apple right now, Apple's down 2%. Is at 187 right now in the after hours. And you got to think about it, Beef. I think tomorrow we got the jobs report. And since Amazon did his thing, and he was saying he missed those Amazon calls. Calls is when you're a bullish person. I was bullish on both. I thought both of them would probably do well this quarter. But this is a short-term play. So you're saying that's all you can afford. That's why you got that. And that's a big trap for a lot of people who trade. They don't get what they think is best for them. They get what they can afford, and it's almost like gambling, right? If this is all the money I got, I've done it before. That's why I can speak on it. Well, I only got this. So even though I would do this, that's why people don't sell calls. Selling calls winners. I sold some calls. Beef, I own over 100 some shares in some portfolios of Apple, and I sold them. Got, I don't know, $100. The stock goes down. I keep but people don't sell calls. Because how much does it cost you to get 100 shares of Apple? That's 20 grand. If I'm not mistaken. That's like 20 grand. So people, man, I ain't got 20 grand, but I got $500 to make this bet. So they make that risky bet with the $500. So yeah. So yeah, there we go. So now when you go back and you look into these operating expenses, you're seeing that net income was $6.7 billion for Amazon, and which is still a good number. A whole lot more than what I made. this quarter. That's what they netted. They netted that. But you can look at Apple. Apple netted way more than 6.7 billion. It's almost like 30 billion. Even though Amazon made more money, Amazon has to deliver. You got to pay people to deliver. You got to fly. So Amazon has a lot of expenses that come out of that. But you got to think about it. This is Amazon is kind of in the technology retail space versus Apple is more in the technology space. So here we go here. Diluted 10 billion. Let's see what that shareholders' equity is. We got to get down to the balance sheet to get that shareholders' equity. So they had their net income of 6.7 billion. Total compensation they had to take out for foreign currency exchange. Some losses and gains there. So they ended up with about $7 billion. When it's all said and done, they made about $7 billion, which is great because last quarter, you can see here, they reported a $4 billion loss last quarter, this quarter, last year. So this quarter in 2022, they reported a $4 billion loss. So this year, they reported a $7 billion gain. And Amazon's $128. Not anymore. It's trading for $140 at the end of the market. So now you can see where their money is coming from. Their money is coming from, let's see here, North America. Their North American sales, they made about $82 billion there. They, once they took out the operating expenses in North America, they made $32 billion. Internationally, they made $29 billion, but then they had operational expense more than that. So they lost $895 million overseas. So Amazon makes a lot of money, but loses it. It made $29 billion in sales, but then it lost. The operating expenses are killing Amazon financially. So you can see they made $29 billion, but spent $30 billion on getting it right. So they lost $894 million last year. So this is a good one here. The AWS, the Amazon Web Services, the sales were $22 billion. They lost $16 billion on the operating expenses. They took home $5 billion. So they made $32 billion on North America sales. They lost almost $1 billion on their international sales, but then AWS. So looking at this, they make their most money off of AWS this quarter. You guys and girls can see that. So they took home. Now they go in, they'll be like, oh, Amazon. How does Amazon make their money? Oh, they're making their money, man. I went on Amazon and bought all this stuff. They're showing you right here. Yeah, they made $82 billion. It's not about how much you make, how much you keep. They made $82 billion off of net sales in America, in North America. But once they paid all the operational expenses, they took home $3.2 billion. But look at the Amazon Web Services. They took home $5 billion. Not a big stretch, but $2 billion more. They were more profitable on the AWS system. So I tell you, a good bloodline for them is that AWS system, the Amazon Web Services. People think, oh, it's the retail. No, it's the AWS. You can tell them you read the black and white. 99.9 people won't even know what you're talking about when you read the black and white. What you talking about, man? I read an article, blah, blah. You could tell them, man, I watched this goofy dude 12 o'clock at night, 1 o'clock in the morning on YouTube. And this dude broke it down and showed it to me myself. Only way I don't have the right information is Amazon straight up is lying, which is not too far-fetched with companies these days. Anyway, but let's go with it. Consolidated, they took home $6.7 billion. They've seen their sales growth in North America, AWS. So AWS is a big thing for them. So they reported their total assets of $462 billion. Look at their liabilities. Their total liabilities, where their total liabilities are. Total liabilities, okay, this is now the money. When we come down to the money in the bank, this is what Amazon take over. They got $462 billion in total assets. You subtract out of their bank account of their total liabilities of $155 billion. I'm sorry, y'all. I read that wrong. That was their total current liabilities. They kind of fooled me there. It's 155. Give me 1 second. That number should be much higher. They didn't add it in there like they're supposed to. So their total current liability is 155. Then they got their leases is $72 billion. Their long-term debt is $67 billion. Other long-term, I definitely don't like how they wrote this out. Trying to sound confusing, but they're not going to confuse me. So right here, So they got about 300 billion because they have 146 billion in net worth. So you take their total assets and their total liabilities, they got 146 billion dollars. Make sure I'm reading the right quarter there too. I'm sorry, I'm sorry. Okay, there we go. Correction. It's 168 billion this quarter. I was reading that was last quarter that I read at the bottom there. So their total assets is 477 billion. They didn't write out their total liability, just wrote out their total current ones. So it's kind of all I got to do is take the 477 and subtract out 168, and that would give me their total liabilities, which by eyeballing it is about 300 billion. So you take out the assets and liabilities, or take on the shareholders' equity of 168 billion. Now, when it comes down to that balance sheets to the banks, Amazon kills Apple. But when it comes down to making the money, the most cost-efficient money is Apple. So if some crap hit the fan, Amazon can withstand a whole lot longer than Apple. But Apple right now, they're being driven by that iPhone and their services. And now you tell people today what's driving Amazon. I won't say the answer. AWS, right? So all in all, that's kind of crazy that Apple went down, but Amazon went up. But all in all, still two big juggernaut companies that are great. Amazon is up about 8% in the after hours. Apple is about 2%. I think Apple is probably going to turn around and shave. I think tomorrow we're going to have that. We're going to have the jobs report come out in the morning to see, and I think the jobs report is going to be good. And then, because it's not that hard to find a job these days. So the jobs report is going to be very good, and that's pretty much it, ladies and gentlemen. So there you have it. Hopefully y'all got something out of it. You got something out of it. You hit that like button, the share button. You tell your friends, your mama, your cousin, your co-workers, your boo, girlfriend, husband, wives, all about Prince Dykes and the Investor Show. So, ladies and gentlemen, that's going to be my time for today. Thanks for everybody who tuned in the chat. Nobody called in today, so I guess y'all don't want to talk to me. Maybe it's like, dude, I just want to hear you talk, I guess. Still see people here live hitting the like button. Definitely appreciate that. But that's going to be my time tonight. I appreciate y'all. Hopefully y'all got something out of this. Amazon, Apple, still both good companies. But going forward, Apple seems to have a more stronger hold because of the cash it's generating. Because we saw they got cleaner cash than Amazon. But when it comes down to that bank account, Amazon's reporting, hey, we're the man over here this quarter. But I hope y'all got something out of it. Y'all keep on buying at Amazon. See, I even learned something new today. I learned something new today. Most people think Amazon makes its money off of retail, but Amazon clean money comes through that web service. If they didn't have that web service, man, their report would look a little raunchy. Because they made a whole bunch of money, but it's not about how much money you make, it's about how much money you keep. Ladies and gentlemen, that's going to be my time for tonight. I got to get out of here. Thank y'all for tuning in. Until the next video, podcast, cartoon, or whatever else crazy you see me doing around the globe. My name is Prince Dykes. Peace. Be safe. I'm out. Thanks.